Right, can you hear me now? Is that better? Just stick your thumbs up if you guys can hear me. Is that better? All right. Sorry about that, guys. It seems to be a bit of a technical glitch. Apologies for the delay. We are waiting for a few more other groups to join us. And while they wait, we can just start along. Firstly, I just want to get a bit of feedback from you guys. How are you finding the last few weeks with regards to going through the work? Soldier, if you guys want to just share maybe something you find troublesome or you find easy, you can either write it in the box or you can chat straight to us.
The assignment was tough.
Sorry?
The last assignment was really tough. The adjustment, it was really tough, yeah.
You struggled with the last assignment?
Yeah, the last one was not really good, and say, yeah.
Did you guys did you struggle to come to terms with the debits and the credits and understanding why there are debits and credits on those adjustments?
No, the only thing that we find hard of is that all the questions weren't balancing. None of them were balancing, and I tried like for 3 days going through the questions. None of them balanced. Yeah.
Okay. Did you manage to go through the chapters before you did the assignment?
Yes.
And you understand the concept?
Yes, I understood the concept.
Probably not 100%, but we had an overall understanding of it.
Pardon? Can you just repeat that?
Probably not 100% understood, but we had an understanding of what was going on. We just had trouble working through.
Those adjustments, they can be quite tricky because it comes down to a lot of the time understanding the debits and credits. And I know from when I first went through it, even in school, going through those adjustments, I didn't understand them. I learned it as if I was learning like I was trying to learn it for the sake of learning how to explain something, or just learning debits and credits in terms of, okay, this is a transaction, therefore this is the debits and credits. And it's only really when you go down to the crux of it, understanding the question, can you know which side to debit and which side to credit. But often a lot of it also comes just with practice. So you'll find that the more questions you do, the more your confidence goes up, because you're able to apply it in multiple questions. Would you guys like me to focus on some of the adjustments today, or would you like me to go through some aspects of the inventory? Because this is your time to ask questions, guys. So this tutorial, just a reminder, it's basically your opportunity to ask questions. If you're struggling with a certain aspect or a certain question, this is your chance to just raise it and go, okay, Mark, I don't understand this concept. Can you please repeat it? Or I don't understand what they're trying to say here. Please, can you just go through it again? This is what this tutorial is for. So please use it to the best of your ability. I think it's for your benefit. So these tutorials aren't lectures. Okay, I'm not going to go through aspects of the textbook now. I'm going to touch on aspects that you guys would possibly like to be revised or to go through again. Does that make sense? Are you writing a question? Okay, new message. Okay. All right. Let's just quickly address that, David. Thanks for the clarification on the assignment 6. That will be uploaded tonight. There was a bit of a technical glitch with regards to the uploading of the assignment, so apologies for that, David. We will extend the deadline as well for that. With regards to the assignments, let's see if we can possibly go through it now. I just want to see if we go through the assignment, which is due on the 20th. Okay, we can go through certain aspects of the assignment now if you guys would like. Let's just see which ones have gone through it. Okay, so that's basically. All right, so I normally don't go through assignments right after they pass, but since there's generally a good week and a bit past since the last one, I'm going to go through the assignments with you guys. So for those of you who have the assignments, is there any specific question that you'd like me to go through? Or would you like me to try and go through as much of the questions that I possibly can in this tutorial? It's your call. I'll get the assignment out so long. Okay. Okay, so for those of you guys who just joined us, we're going to go through the assignment number 5. We're going to go through some of the questions, and possibly if you've done this assignment already, it might be good just to open your answer sheet and just see where you possibly went wrong. This assignment is fairly complex compared to the ones that you've had before. And generally, if you can understand a lot of these adjustments and closing journals, it'll really help you, okay? Because if you can understand these concepts now, for the end of your exam, the chances of you having adjustments in the exam is relatively high. The reason being is because it's such a crucial part of accounting, and for most businesses, you'll have to do these year-end adjustments, okay? You might not necessarily have to do them manually, but you need to understand them so that if you apply it to a business, you know where the figures come from. All right, so let's first open the question number 1. Then we can get going. Is he loading? Okay, so question number 1, they give you a pre-closing trial balance, all right, for the year ending 30th of January 2014. The name of the company is called #Marketers. The question is for 40 marks, all right. I'm not going to go through in depth the mark allocation here, because otherwise we're not going to have time to go through as many questions as we can. What I'm going to go through is what the journals are and how we're going to get to the post-closing trial balance. Okay, so you'll see once I upload the solutions, then you can go through it in more detail. But what I want to use today for is to try and understand why we're doing certain things that we do. Okay, so this post-closing trial balance, you'll notice that a lot of the figures and even the descriptions of the accounts, okay, they're all mixed up, right? So you don't necessarily have all your balance sheet items next to each other or all your income statement items next to each other. You've got them all mixed up to try and confuse you, right? So the first thing is you need to do is to actually determine which of these accounts are balance sheet items, right? And which ones are generally either balance sheet. When I use the word balance sheet, I use the word statement or financial position interchangeably. Okay, so when I mean balance sheet, I mean statement or financial position, and so once you determine which of these accounts are either statement of financial position or statement of comprehensive income accounts, then we can determine, okay, which of them actually need to be included in the closing journals. Because remember, only the statement of comprehensive income items need to go into the closing journal entries. All right. Remember, we don't include all the figures in the closing journal entries. So the first question asks us, using the information in the post-adjustment trial balance for the year ended 30th of June 2014, prepare the closing journal entries for the year ended. All right, and then using that, obviously prepare the post-closing trial balance. All right. Okay, so remember that the pre-closing trial balance is before the final adjustments have happened. Okay, so when you see that as a heading on the trial balance, you know that the final adjustments haven't been put through. Okay, so what I'm going to do is I'm just going to go through these accounts and I'm going to tell you which ones we need to be included in the closing journal entries, which ones we don't. Okay, and then from there you can check on your answers and see maybe if you've included some of the ones that you shouldn't have. All right, because that's half the battle. If I split them up between statement of financial position accounts and statement of comprehensive accounts, it would have been really easy for you. You could have just ignored the statement of financial position figures for much of the question. Okay, so capital. Capital is an aspect of is in the category of owner's equity. Okay, and that is a statement of a financial position accounts. Okay, so we can just if you want, you can just put a little cross mark there if you like, just to say that it's not going to be included in the closing journal entry. Next one is your long-term loan. All right, long-term loan. It's a long-term liability. Remember, assets, liabilities, and equity are included in the statement of financial position. Right. Everything else is included in the statement of comprehensive income. Okay, so just bear that in mind. Whenever you see loans, any form of assets, any form of equity, any form of liabilities, you're gonna include them in the statement of financial position. Are you guys with me? Okay, the next one is trade payables. Right, trade payables, another word for creditors, will also be a liability. There will also be a statement of financial position account, so that will also be excluded. All right, so you can put an X next to that as well. Accrued income, right? Remember, accrued income is one of those tricky sort of accounts that actually relates to income that is accrued, meaning you've recognized the income, but you haven't actually received the money for that income. So it's almost like a debtor in a way. So for example, if someone pays you a month in advance, okay, so now let's just say the year end is end of June, like it is, and they paid for maybe July's electricity, okay? No, that's a bad example. Let's say, for example, that...
There's an error loading up. What?
Let's say, for example, you guys want to ask a question? So, Trevor? You guys want to ask a question?
No, we aren't asking any question.
We just got
Okay.
disconnected for a few seconds.
Yeah.
Okay, I'm just going to mute you, all right? If you want to ask a question, then just let me know or just type in the box. Because the feedback is quite bad.
Okay.
Yeah. Okay. All right. So accrued income. Let's give an example where maybe you're renting out a property. So you're gonna credit the rent income, and perhaps they haven't paid you for the rent, right? So you've got to accrue for that income. Let's just say for the month of June. Okay, it's the last month of the financial year. Normally they pay you at the beginning of the month, and now they haven't, right? And it gets to the end of June 2014, and they still haven't, right? So then you're going to raise what you call accrued income. So it's money that is income, but you haven't received it yet. So it's almost like a debtor, right? So when you see that accrued income, you must know that accrued income is going to be, it's going to have a debit balance, all right? And it's going to be a statement of financial position entry or account, okay? So in a way, accrued income is almost similar to a debtor, right? So that we're also going to write an X next to it. It's not included. It's not included in the statement of comprehensive income. It's a statement of financial position account. Okay, the next one, rental paid. Okay, that's an expense. Okay, so that is included in the statement of comprehensive income. So you can put a tick next to that one. The next entry is buildings, accumulated depreciation. Right. So remember, for every asset account, there's two accounts. There's a cost account and there's accumulated depreciation. All right. Now, accumulated depreciation is basically all the depreciation relating to that asset accumulated over its lifetime. Okay, and that's always on a credit balance. Right. So usually you'll have buildings cost, and then right underneath it you'll have buildings accumulated depreciation. So if you look down further, let's just see, you'll see buildings cost a bit further down, the 990,000. Okay, so those generally go together. I'll just split them up just to test you guys. But that's also an asset account. Okay, so it's reducing the assets of the buildings, right? So that is a statement of financial position account. You can put an X next to that. That's not going to be included. Okay. So far, out of those top, the top 6, only one, that rental paid, is going to be included in our closing journal entries. Okay, because that's the only one that's included in statement of comprehensive income so far. Next one, trade receivables, another word for debtors. Also, it's an asset. Okay. So that's also going to be included in the statement of financial position. You can put an X next to that. We're not going to include that amount. Cost of sales, right? Cost of sales is a statement of comprehensive income account. Okay, so that we can put a tick next to. We can include that one. Salaries is an expense. Okay, it's definitely included in the statement of comprehensive income. So we're going to put a tick next to that one. The same with water and electricity, also an expense. Then buildings cost, that's also an asset. Remember we spoke about the accumulated depreciation above. So buildings cost, you'll put a X next to that one. That is not included, okay, because it's part of the statement of financial position. Discount allowed, that's when you're giving discount out to clients, all right? And that's why it's an expense, because it's reducing your profit. You're giving discount out to some of your clients. That's an expense, okay? So that will be included. You can put a tick next to that one. Office equipment cost, okay? That's also an asset, right? So if you see word cost or cumulative depreciation next to an item, you know it relates to an asset, okay? So you can put an X next to office equipment. It's part of the statement of financial position. We're not going to include that, right? Repairs and maintenance is an expense. We include that. Put a tick next to that. Prepaid expenses. Okay, prepaid expenses is also similar to a debtor in the fact that you've paid someone for expenses that haven't actually been incurred yet. Okay, so it's almost like you're paying a company in advance that technically, because nothing's happened, let's say you're paying for electricity in advance. You paid for the month after the year end. Okay, so let's say it's now the end of June 2014, and you want to pay for the month of July, right? So you've made that payment, but you can't include that electricity expense in this year's financial statements because it relates to July, which is the following year's entry. Okay, so what you will do is you'll debit the prepaid expenses, right? And then you'll credit back, which is when you made the payment. And that's how you get that prepaid expenses. If you see that, you know it's a statement of financial position account. Okay, prepaid expenses, accrued income, accrued expenses, and income received in advance. Those four, okay, those are probably more of the tricky ones, and they are always the statement of financial position accounts. Okay, just because it says prepaid expenses, don't get confused thinking it's actually an expense. It's not. Prepaid expenses is an asset. Okay, why? Because at the end of June, if I say to my creditor, actually I want that money back, I've decided I'm going to buy electricity from someone else, then he has to give it back to me because he hasn't supplied the electricity yet. So that's why it's a debtor, because he actually owes me the money as at the end of June because nothing's really happened. Does that make sense? Okay, next, fees revenue. Okay, that's another fancy word just for income. That's included in the statement of comprehensive income. Inventory is an asset. Okay, stock is an asset. That's excluded from the closing journal entries. It's part of your statement of financial position. Next one, income received in advance. That's another one of the examples I was talking about now. Remember, income received in advance is basically the reverse of accrued income. So where accrued income, you haven't received the money, but you should have, relating to an income. Income received in advance is basically you have received the money, but it relates to a period outside the financial period. Okay, so for example, if you received money now at the end of June, but it actually relates for rental income for July, which is in the next financial year, you can't record that income in this year, you know. That's why it's technically a liability, okay? That's why it's got a credit balance, because at the end of June, you know, that person has paid us now, but we can't actually account for it yet, because at the end of June, he might say, actually, like, maybe there's an option to just waive the rent, and he just wants to, you know, cancel the contract for July. Maybe there's an agreement that you guys can do that, and then he might say, look, he wants the money back. Now it's the end of June. He hasn't necessarily used your property for rent, so that's why it's a liability. Okay, so it's almost like a creditor, but it's just more specific. Okay, so just to remember that income received in advance is a creditor. The other one that's a creditor is accrued expenses, also a creditor. Okay, so if you remember those two, income received in advance and accrued expenses are creditors. Prepaid expenses and accrued income are debtors. Okay, so you try and sort of remember those four. Okay, moving on, bank overdraft. Okay, bank overdraft is obviously you've overdrawn money in your account, meaning you actually owe the bank money. The bank doesn't owe you money. That's why it's in the credit balance. Any bank balance is an asset. and an asset is form part of the statement of financial position. Therefore, we'll exclude that from the closing journal entries. Depreciation is basically assets depreciating over time. Okay, it's not necessarily related to any payments, but it's just a transaction that we pass, and you guys will learn to that more about that in the adjustments textbook. So that is an expense, so we will include that in the closing journal entries. Another one is discount received. Okay, that's basically money, discounts that you receive from suppliers where they've given you more discount, maybe you paid early, and they've wanted to sort of reduce the amount that you need to pay them. So that's why it's technically an income, all right? Because you would have maybe had to pay a supplier a higher amount, but now he's giving you a break and said, it's okay, you're paying early, I'll only let you pay, say, 80 Rand instead of 100 Rand. Okay, so discount received is an income. It's included in the statement of comprehensive income, and that way it's part of your statement of comprehensive income, and that's it will be included in the closing journal entries. All right. Drawings is part of owner's equity. All right. Even though it's part of owner's equity, we will include that in the closing journal entries. So you'll see this is one of the few exceptions where it's part of the statement of financial position, but we will still include it in one of the closing journal entries. All right. The reason being is that every year the drawings, in a way, sort of gets transferred over to the capital account. Okay. So you'll see that if you ever see a post-closing trial balance, it'll never have the drawings in it, because the drawings has already been allocated to the capital account. Okay. Next one, office equipment, accumulated depreciation. Once again, also an asset, like I explained before. Therefore, it will be excluded. Sales of goods is basically another way to describe income. That will be included. Okay, it's part of the statement of comprehensive income account. It's basically another income or revenue account. Interest paid is an expense, so it will be included, and interest received is an income, so it will be included. Lastly is postage. That's an expense that will be included. Okay, so now you've got an idea of all the items that relate to statement of comprehensive income. Okay, and you're only going to focus on those ones plus drawings when you're doing the closing journal entries. Okay, for the closing journal entries, you're going to ignore all the statement of financial position accounts, right? And that's where you guys might be confused, is that you actually just ignore those statement of financial position accounts. All right, so let's go through it here. Okay. All right. I think what's going to be easiest for me to go through this quicker is I'm gonna read out the amounts and whether they should be debits and credits. Okay. And then when you guys see the solutions, you can sort of nod your head and go, okay, I see where I got it wrong. All right. So for the solution, if we look at, firstly, when we go through these closing journal entries, it's always good to start with the income accounts or the revenue accounts, and then after that go through the expense accounts, and then finally you can look at the drawings at the end. It doesn't really matter which way you do it, but sometimes it helps you just to not leave anything out if you've got some sort of structure. Okay, so first off, you're going to look at the sales accounts. Okay, so if we go back to that trial balance, we can see the two sales or revenue items are sales of goods, and the other one is fees revenue. Okay, so we're gonna, because these revenue or sales accounts are on the credit, we have to debit it, right? Basically to wipe it clean. Okay, remember we're transferring everything from the statement of comprehensive income into the statement of financial position. Okay, so remember, every year the statement of comprehensive income is wiped clean. At the end of the year, we transfer all of that over, all right, and we work on the profit or loss, all right. So that's why we have to basically transfer the opposite of that balance for the expense of the income accounts. Okay, so all the income accounts, we're going to debit it because it's technically already got a credit balance. Okay, so for example, fees revenue, we're going to debit fees revenue with that 298,377. Okay, then we're going to credit trading accounts. Okay, remember the trading account is that account that the sales and the cost of sales go into. All right, it doesn't go into profit and loss. But because we've got two sales accounts, okay, we've got the fees revenue and we've got the sale of goods, we're going to put both of those sales accounts into the trading account. All right, so we're going to debit the fees revenue by 298,377. We're going to credit the trading account by 298,377. Okay, so that wipes clean the fees revenue accounts. Right, you guys with me? Next, we're going to go to the sales of goods account. Okay, it's also got a credit balance of 42,500. We're going to debit that. We're going to debit the sale of goods to wipe it out. Remember, a debit wipes out a credit balance. Right? So remember when you guys do the reconciling, the credit balance, the only way to reduce the credit balance to zero is you've got to debit it. Does that make sense? So we're going to debit the sales of goods accounts by 42,500, and we're going to credit the trading accounts. Okay. Next up is we're going to look for the cost of sales account. Okay. Let's try and find cost of sales. There it is, further up. Cost of sales for the amount of 178,920. All right. And because it's got a debit balance, we're going to have to credit that. All right. So we're going to debit the trading accounts, and we're going to credit the cost of sales accounts, right, by 178,920. Right, so that's your journal for that one. Remember, when you do these closing journals, it doesn't all have to be one big long journal entry. I recommend you guys to keep it simple, rather reduce it down to individual ones, unless other than the expense accounts, which you can do all together. But even those you can do individually. You don't have to put all debits on one and then total it together and credit it. I'll go through that now if you don't know what I'm talking about. Okay, so the cost of sales, we're crediting and we're debiting the trading account. And now we've got a figure in the trading account. Okay, so that figure in the trading account, we have to clear to the profit and loss. All right. Okay. So before we get to that, I want to first go through the rest of the accounts. Okay. In fact, let's do it now. Just might as well get out of the way. Okay. So. Right, so the fees revenue, okay, the cost of sales is 178,920. Fees revenue is 298,377. Sales of goods is 42,500. Maybe I should do it. I'm going to try and do it on an Excel spreadsheet and see if you guys can follow. If you guys can't see, then just let me know. Okay. So in the trading account, this is what it's going to look like. This is just the T account, so I can expand it better. Perfect. So remember, you've credited the cost of sales and you debited trading accounts. Okay. The amount of 178,920. Then you've debited the sales of goods account and you've credited the trading account. Okay, 42,500. Right. Then you've done the same with fees revenue. 298,377. Okay, this is technically what it looks like in the GL account. This is not necessarily, I'm doing this to help you guys understand where you get the figures from. But it's always good to just draw a GL account if it helps you get to it. Okay, so remember, we've now got to balance this account. Okay. And the first step to balance this account is we've actually got to total both sides. Okay. So we can total both sides and see which one's the highest. Okay. All right. So the credit side is the highest. Okay. Remember, that's your credit side. That's your debit side. Remember, when you're reconciling an account, you total the highest side, all right? Then you transfer that balance over to the lower end side, all right? And then the difference you're going to take to profit and loss. So the difference between those two would be 161,957. Are you guys with me? So, coming back to the journals, what you will do is this. Okay. All right, guys. It seems that we've run out of time for this tutorial. But what I can do is I'm going to create a video that perhaps goes into a bit more detail of this assignment, so that you guys can just digest it a bit easier, right? That way, you won't have to struggle with regards to understanding this, because I really want you guys to get this. Okay, so for those of you who want to go through this a bit more detail, I'll load up a short video just going through this to the important aspects. But for now, this is the end of the assignment, the tutorial. The other assignment results will be coming out this week. So just keep your tabs on that. And also, just with regards to inventory assignment, that will be uploaded tonight, and the deadline will be extended. So if you guys have got any questions, feel free just to drop an email. Remember, if you guys ever want me to go through an assignment after you've done it, just drop me an email and I can include it in my next tutorial. Often you might forget what you're struggling with when it comes to tutorial time. This is your time to get the best out of it. All right, so that's all for this week. I think the next assignment, after the next tutorial, is, let me see, the next tutorial is, I think, next month. Let me just open it. Next tutorial is the 26th of May. Okay, also at 1 o'clock. That'll be tutorial 6. So I'll see you guys then. Right. Good luck. Chat soon. Bye.